right now we are looking at oil prices on a daily basis, as is your share price. Before we get there, though, I want to start with just consumer demand. There have been a lot of questions about how resilient consumer demand actually can be as this conflict goes on. What have you seen so far?
People want to travel. I think that there's still some consciousness that travel is still a bargain. Really, we're just getting back to yields that we had in 2014 and 2019. So that sense of travel as a bargain, I think, is apparent. And what we've seen, tremendous demand in the first quarter. American Airlines year-over-year revenue improved 10-11%, and we're forecasting revenue to improve 15%, year-over-year. And that's some additional capacity in there, but a lot of unit revenue performance as well, which suggests that people, are finding great value in travel.
Where is the demand coming from? Is it leisure? Is it business? Is it both?
It's all of the above. And it's business, it's leisure, it's domestic, and also international is still leading the way. Premium is still outpacing leisure, but I really like what I see. And in terms of capacity, I think that it is responding to market dynamics. I think that the industry is stretched in terms of margins, and at least for us, I like what I see in terms of how we're set up.
You say capacity is adjusting. Does that mean capacity is coming down and prices going up?
Well, we've pulled a little capacity out, and we'll of course take a look at what's happening later in the year. We're very margin conscious. I mean, at the end of the day, that's what we're in business to do. But right now, demand is very robust. And as we look at closing out the second quarter, we're going to close out the second quarter in a really strong fashion.
Have you seen any businesses pull back on business class travel? We've heard some companies start to discuss that type of measure just because of the cost. Have you seen anything like that?
Not at American. We're business travel is up 13% year over year. And I think it's really responding to some of the things that we've been laser focused on. We have 4 pillars. One is elevating customer experience, growing back our network, really make sure we're driving premium revenue, and then leading in loyalty. And all of those are resonating with our customers right now. And American has done better year over year on a quarterly basis, last 5 out of 6 quarters in terms of unit revenue production. So I like what I see.
You've talked about how there's an estimated $4 to $5 billion of costs for 2026 as a result of fuel prices being elevated. How much of that can you pass along to customers?
Well, it's a big shock right now. And I am very confident that as things even out, that will translate into gains for American and our shareholders. If you take a look back at the first quarter, we were projecting solid profitability in the first quarter, which is usually a tough quarter for us, but for the shock in fuel prices. And the same thing, think about in a year where price of fuel has spiked $4 or $5 billion, we're still projecting the same type of profitability that we had last year. That means good things. In terms of what we hold, I really do think that there's some stickiness to a lot of what we're doing, and it's upside that's unique to American. But there's a rising tide as well. Everybody's got to be margin conscious, and of course there's been some struggles in the business among those that are serving the lowest cost demand, or the lowest revenue demand.
Just to sort of put a bow on that, in other words, when you are passing along price increases, do consumers push back, or are they remarkably resilient and just accepting it because that is the status quo across the industry?
No, we're trying to give our customers something that they really value. So, I know that our basic economy product offers incredible value to those that avail themselves of it, but we're giving people buy-up opportunities as well. And from a product perspective, you name it, flagship suites, the new flagship lounges, opening up new routes, all of those things appeal to our customers in a way that they say, hey, I can find real value in what American's offering.
How crazy is it going to get? Private plane, half the plane is a personal sort of suite where you have entertainment?
Well, I like what we're doing. We're looking at the entire fleet, but the investments that we're making that are coming to fruition right now are really an indication of we skated to the puck in the right place. So our flagship suites that are on the 787-9s that are delivering right now, fortunately on time, 321 XLRs are coming in. But not only that, the reconfigurations that we set out to do a few years ago on our 3 319s and our 320s. It's all increasing the mix of premium seating. It's going to grow probably at twice the rate of our leisure, our general cabins, our main cabins. But I really like what I see in terms of that premium product. It's leading the way, and it's very positive.
You talk about some of the issues that we've seen elsewhere, particularly in the budget carriers, Spirit going bankrupt among them. How do you see that in terms of an opportunity to gain share? Is this a time to see what potential business you can pick up from the likes of Spirit now that they're defunct? Is this a time for mergers and consolidation in that way?
Well, I'll start with this. American has the most comprehensive network in North America. And that's something that our customers can avail themselves of, take advantage, and really get to anywhere else in the world with our partners as well. So as we take a look out into the future over the next 5-10 years, our network, Miami-based, a large hub, DFW, Phoenix, Arizona, you name it, Charlotte. We're in all the right places where economic growth is going to happen. So first and foremost for us is growing our organic network and making sure that we're doing well. And then opportunistically, if assets become available, by all means. And as well, we have a great set of partners, joint business across the Atlantic with IAG, which includes BA and Iberia, with JAL across the Pacific, with Qantas in Australia.
So assets become available, meaning planes and maybe gates, not necessarily entire airlines?
Planes and gates, but planes and gates first and foremost, and how we've really fleshed out our network. I want to give a shout out to our team. They do a great job taking care of customers every day. Reliability is key, so when I talk about customer experience, that is front and center, and they deliver it every day. But anything that we can do to add to the franchise, we're doing it. And then, of course, we've been really creative in the past, whether it was the NEA, which a judge, I think, inappropriately struck down, would have benefited us in JetBlue, or what we're doing with Alaska Airlines, West Coast International Alliance. All of those things are just creative opportunities, and we'll continue to look for those. But in the meantime, there's more upside in American than really any other carrier because of what we've been doing in investing in our 4 commercial pillars, and because of the fact that there's, quite frankly, more ground that we've had to make up. So
a marriage between American and United, not in your bingo card?
That was a no from the get-go. And at the end of the day, doing something that would be viewed as anti-competitive by just about everybody that looked at it is just something that we don't spend a lot of time on. And that's why all of our attention is directed at really making sure American takes advantage and gets set up for when fuel prices normalize a bit. That's going to mean good things for us.
Do you think that American can thrive even with oil prices where they are today?
Well, you take a look at in the later teens in the United States. Airlines made good money with oil prices above $100 a barrel. Now, my own view is I don't believe that oil prices will stay at this level. I think that the conflict in the Middle East at some point is going to be resolved. And I want to thank all of our service members for what they do every day, and I want to thank the administration for making sure that we get through this. But on the other side of this, I'm really confident that we're set up better than anybody to take advantage of fuel prices that are more moderated levels.
Do you think that right now, the way that things are set up, if the prices that we have today at like $90 a barrel or $85 a barrel, you could return to the profitability that you had forecast at the beginning of the year?
Well, it's going to take some time, but that is certainly the intent. And not only that, I mean, it's not just what we forecast this year, but for us, I look for pre-tax margins to get back into the higher single-digit levels. And the way that happens is keeping a close eye on the marketplace. And ultimately, we're in this business to make a margin. I think it's different in that a lot of the lower-priced competition is really having struggles. And so as we go forward, if there's a need to reduce capacity to get back to a business model that produces acceptable margins, we're going to do that. Right now, we see considerable strength. I hope that this is more of a blip that is, months in the making, as in, years in resolving. But when we get through this, we'll be in great shape.